Hey traders, it's Stephen Brooks, and today I'm going to give you my market outlook. Now, I'm shooting this video on Sunday, March 1st, 2020. So this would be for my outlook of this upcoming week, which tomorrow would be March 2nd. And please understand, folks, that with the way news travels these days, that this video, even though I'm shooting it about 16 hours before the market opens tomorrow, there is, of course, a lot that can happen in the next 16 hours that could potentially change what I'm talking about. But the information I have before me, this is what we're going to talk about. So the big question on my mind and what I want to talk about today is, how come something like the coronavirus has turned into a market absolute meltdown? Now, in the United States, on average, in the United States, on average, there are 50,000 deaths per year from the flu. Globally, every single year, on average, according to the CDC, there are 500,000 deaths per year in the world from the flu. Right now in the United States, there has been one death from the coronavirus. Right now in the world, there have been a few thousand deaths from the coronavirus. Let's call it 5,000 just for argument's sake. Maybe it's a little bit more, maybe it's a little bit less. Maybe by tomorrow we'll find out that the number is much bigger or much smaller, but that's the numbers that we have right now. So the big question is, we have the flu, which has 50,000 deaths a year in the United States, but has one right now. We have the flu, which gives on average about 500,000 deaths per year from the flu worldwide, but there's only 1% of that, or 5,000 right now, worldwide from the coronavirus. So the big question is, how can a illness, a virus that has a fraction of the deaths of something like the flu cause such a market panic? Well, let's look at the flu, for example. We have a few things with the flu that we don't have for the coronavirus. On one hand, it is very seasonal. And we know that for a fact that the flu is very seasonal. As an example, 98% of the deaths in the United States that come from the flu happen between the months of November and April. Why is that? Because when the weather is on average a little bit warmer than it is in the winter, the flu very much doesn't exist unless you're in very specific northern parts of the United States. There is also a vaccine. By the way, sometimes that vaccine works and sometimes it doesn't. And number three, for the most part, the healthy do survive. If you are someone who is already quite ill, as an example, or quite elderly, then of course you have a better chance of potentially having a death from something like the flu. But we have a very good idea that unless you are very unhealthy, or unless you are very elderly, or else you have something going on with you, that you are pretty substantially unlikely to die from the flu. So again, we have 50,000 deaths a year in the United States from the flu, but we only have one for the coronavirus. The problem with the coronavirus is the same problem that we've had from the beginning. There is so much uncertainty and there are so many unknowns when it comes to this virus that even though the death toll is a micro fraction from the coronavirus compared to just the standard flu, the market is now in a complete catastrophe and complete turmoil. So again, do we know if the coronavirus is seasonal? No, we don't know that yet. A lot of folks seem to believe that when the weather gets warmer, at least here in the United States, that similar to a virus like the flu, that the coronavirus might go away. We think that, but we don't know that. At the same time, we know for sure that we don't have an accurate vaccine. We think that the Gilead drug or whatever these other companies are may help the coronavirus or maybe a vaccine, but we don't know that yet. And on top of that, although the death rate is quite low for the coronavirus, we don't know for sure if the death rate and the percentage is going to be similar to the flu. We don't know, as an example, if maybe younger or healthier people or some folks that don't have another illness are the ones who survive, as an example. We don't know that yet. We only have best guesses. And that creates, again, what the market hates, and that is uncertainty. Unfortunately, last week was a horrific week, but it was kind of the combination of many things going on at once. Number one, last year, 95% of funds underperformed the S&P 500. So what does that mean? If they want to keep their money under management, they better not underperform the market. So what did they do? Well, come January 1st, earnings were looking excellent going into 2020 and beyond. The Fed is being quite accommodative to markets. The United States passed USMCA and a China won Phase 1 trade deal. All things very, very good for the economy and substantially good for the market. So what did these big funds do? They leveraged like crazy because they need to outperform the overall market. So they got to 15-1 or 10-1 in terms of their leverage. What that means is if you have $1 million as an example, if you went 15-1 leverage, you'll be able to use 15 million. And if you have 10-1 leverage, you'll be able to use 10 million. So what happened was at the beginning of the year, these funds got very, very leveraged and they bought a ton of stocks. What you saw at the end of the day on Monday, which took the rest of the week kind of to get out of our system, was you saw a lot of deleveraging. You saw a lot of deleveraging. That created a big cascading effect in the market because the folks with the biggest amount of capital were getting margin calls because they were getting destroyed on their positions, and a lot of hedge funds went busto and are no longer in business just because of the last 5 days. Again, if you look at some of these things, so you take the fact that funds were selling every single share that they had because they were so leveraged to the hilt, that created kind of a cascading effect, if you will. If you take the funds deleveraging and you combine it with the fact that we don't know for sure if this is a seasonal illness. We don't know for sure if and when a vaccine is going to come. We don't know for sure if only the healthy survive or what is going on there in terms of the death rate from this illness. We don't know that for sure. We also don't know for sure how many people actually have it or what the symptoms really are. You take those two things, folks, and what do you end up getting? You end up getting a 13% correction in 5 trading days. You end up getting the fastest 10% correction of all time. You end up getting 3 months of profits wiped away like that. In my opinion, folks, the people being so scared out there, being so frightened for their mind is very overblown. I believe it's very overblown. But the reason I believe that is because, again, we have 1 death in the United States, but so far this year, there's probably been like 20,000 people who have died from the flu just in the United States. But again, nobody cares about the flu because we don't have a lot of uncertainty and a lot of unknowns about the flu like we have for the coronavirus, as an example. So again, you take the fact that funds were deleveraging like crazy and people were panicking out of their minds, of course you're going to get a very, very nasty week. So the big question is, what happens moving forward? Well, again, just because myself might not agree with such negative reactions to what's going on with the coronavirus doesn't mean that it's not legitimate and it's not here to stay. So here's what I see moving forward. I believe, and not a lot of folks are going to like this, but this is just what I believe we will continue to see massive selling pressure. Massive selling pressure. Until we get very positive news. In the past, you could basically buy any dip because the economy was doing really well, stocks were doing really well, earnings was going very well, and at least the administration in the United States was very, very positive toward the market. For that reason, you could basically have bought any dip in the past and have been totally fine. If you don't believe me, 10 days ago, the stock market was at an all-time high. Now, I believe we are basically the reverse of that. I believe unless we get very positive news, such as the virus is spreading way less, we haven't heard that yet, such as there is a vaccine or a drug that is definitely working, we have not heard that yet, such as the United States Congress or the White House is going to do some fiscal stimulus, reduce taxes, loan small businesses money, all that stuff, we haven't heard that yet. So in my opinion, until we hear some substantially positive news, I believe we're going to continue to see a lot of volatility. Of course, the bigger the sell-off, we will get bounces, we will get rallies in there, but I don't believe we have a sustained rally until we get significantly positive news. Not marginally positive news, significantly positive news. So what does that mean for you as a trader? Number one, any rally, and I've been saying this for a couple of days now, any rally that is not accompanied with very positive news, like we know it's going to be seasonal, like we know there's going to be a vaccine and it works, like we know what the death rate's going to be, if we have any rally that is not based off something substantial when it comes to the coronavirus, I believe that, unfortunately, this point is a good selling opportunity. There is panic out there. People are just clicking the sell button and they're not looking back. There are very few buyers in the market. Again, this is an unfortunate situation, and the reason that's happening is because if you take the fact that so many of these hedge funds blew up last week because they were so leveraged at the beginning of the year, and you combine that with the uncertainty that is the coronavirus, even though the death toll is a micro fraction of what the death toll is for the flu, people are freaking out. That will likely continue until we get some really positive news. Media outlets are getting a lot more clicks. They're getting a lot more eyeballs the worse this gets. Unfortunately, folks, they're not going to stop that. Right now, anyone with a stuffy nose or anyone that has a little bit of a cough is way more likely to believe that they might have the coronavirus as opposed to just the flu or the common cold. They're going to go to hospitals, and these news outlets are going to report on that, whether they have coronavirus or not. So again, I believe the snowball effect is currently happening right now, where that snowball is gaining weight and is picking up momentum going to the downside. This is going to be a very finicky situation, folks. Right now, the VIX is at 50. That means that the market is projecting a 2.5% move up or down in the S&P 500 per day. Per day. That's about a 60-point move. That's a big move, but that is what the market is expecting. Again, although in China, every Apple store is already reopened, every Starbucks has reopened, foot traffic is getting back up, not where it was before, but it's improving as opposed to not improving. It doesn't matter because, again, there's still so much uncertainty about this. If you take that and you combine it with the fact that there are a lot of hedge funds that are trapped higher, very leveraged, you're going to get that snowball effect. So moving forward, folks, I believe this only stops when we get some substantial and realistic news and have realistic expectations about this illness, which we don't. Again, if you're looking at the coronavirus, there's been one death in the United States due to the coronavirus this year, but on average, there are 50,000 Americans that die every year for the flu. Most people will say, well, then why aren't we freaking out about the flu? It's because we have only knowns. We know everything there is to know about the flu, and we know basically nothing when it comes to coronavirus. The reality is, it's just as likely that by the time June comes around, we realize that coronavirus is a nothing burger like the flu, as much as that is just as likely as this continuing and spreading all over the United States and having parts of the United States, such as schools, municipalities, shut down for a while. Both of those are as likely. However, if you combine the leveraging that hedge funds have, the news media doing what they're doing, and again, it's not their fault. They're in there to make money. If you combine those things, I believe we continue to see substantial selling pressure until we get some more knowns about this virus. I wish I had better news for all of you, but this is the world we live in. Fortunately, the trades we've been able to place have been really profitable, and they worked out really, really well during this time. I just think that the type of speed and velocity that we are seeing from selling pressure, I believe, unfortunately, it is likely to continue unless we get some real knowns about the coronavirus, which we do not have today. So again, folks, if you see any rallies that happen without really figuring out the seasonality about this, really figuring out if we have vaccines or cures, if you see any rallies that come without that, that's just, you know what, there's maybe a little bit of a short covering rally, or the Fed maybe said something positive. But at the end of the day, in my opinion, those are all going to be selling opportunities, because how we got into this, we have to reverse that to come out of this. And how do we reverse that? We start getting certainties about coronavirus, which we do not have today.